Okay, welcome. And in this video, I want to show you how to grow a $10 trading account, even if you are a complete newbie. So you can actually grow your small account if you don't have equity in trading the forex market, the financial market. And of course, though it's advisable to have a significant amount because it affects your profit, and also it is very important to know that trading is actually very risky and you can lose all the money you put in. So this is not a financial advice, but for just educational purpose. So let's get to it. So for you to grow your $10 account to a significant amount, like how do you grow a $10 account to $50 account or even a $100 account? Is it your plan to grow your $10 account to $100 or $1,000? But then the main point is, are you looking to increasing your equity? It might be for different reasons, whether to buy something to meet a need or to buy a prop firm account. So this is just a guide to that. So what do you need? What are the key requirements? First off, you need to understand, must have understanding of a good strategy, of course, understanding of the market. Probably you must have gone through a course, a paid course, or maybe some free YouTube videos. But then the key thing is it has to boil down to you having a great strategy. You need to have a great strategy, and it shouldn't be strategy hopping. So just stick to one strategy that you have back tested on demo. You have tested on demo, back tested on the charts like TradingView, and then you can now go to the live market with your small capital. So you can use a strategy like either demand and supply, or the trend line strategy where you draw trend lines. Of course, all these strategies also need the understanding of market structure. You must understand market structure, and of course, we can also use the support and resistance strategy. So once you have a good strategy, then you are good to go. You can then go ahead and fund your $10 account. You fund your $10, and once you fund your $10, then you go ahead to choose your method. So these are the two methods that are available to you. So you can see here that you can flip. The first method is to flip or you stack trades. Usually this is high margin and it's riskier. It's riskier. Here you stand a chance of losing 100% of your account. That is your entire $10. Also, I put an example here on the right. If you see that image, is an image of me on a demo account. I was testing out a particular strategy, not a strategy per se, but an entry on a $10 account. But then this one was not actually really full margin, but as you can see, I had 7 positions open here. 1, 2, 3, 4, 5, 6, 7 positions. And if I had 7 positions open, if I was to risk $1 per each position, noting that gold requires wider SL, so this most likely was a sniper entry where I was looking to risking maybe $10, risking $1, which is 10 pips per position. So for a 10 pip SL, which will really be an entry on reversal on gold when gold is in a trend and trending, and then you got a sniper entry, you could have gone full margin or just go risking more, like virtually a larger part of the small account, because the account itself will have been counted as a risk capital, you understand, which is what this $10 was. This was an example of a demo account anyway, but on live account I will just open 1 or 2 positions for these accounts, and I might just hold for 100 pips. So you also need to note here is that what these methods will bank on is the fact that the pair you are trading, how conservative or how volatile or how gentle the pair is, and of course the volume of liquidity in the market. So you can see for gold is very, very volatile. And gold, if you trade gold, I trade gold like gold and GU 100% of the time. Gold and GU. If I'm not trading GU 90%, I'm trading gold maybe 70-80% of the time. So it's usually either gold or GU. Those are the two trades I trade, the two pairs I trade majorly when I'm trading. So gold moves, like I've mentioned in the previous video on the demo of flipping $100 to over $1,000. Gold usually moves 100 pips every day, either at the opening of Asian session, opening of London, or New York. So usually I look into the New York and then the Asian session. So gold will do at least 100 to 200 pips. Sometimes it might do 1,000 pips over a couple of days if you hold it over a couple of days. So as you can see in this example, gold did 20 pips. So 20 pips, 200 pips. That was why you add a position doing $20. So it actually did over 200 pips, and sometimes gold will do 500 pips over a couple of days, but in a day it can do 100 to 300 pips, but on average 100 pips. So if gold is going to do 100 pips and you have 7 positions open, then you know that you could take your $10 to $70, right? And then if it's going to do 200 pips, you take your in 7 positions, you would have around $140. That is, you'll have taken your $10 to $140. And of course, I did not mention that you need to have a good broker for these accounts, these demo, these tests that I've done with XNET. I'll put the link in the description so that you can open an account with XNET, and for you to be able to do this with many positions. I'm still talking about the flipping approach now. You need to put your leverage on unlimited, unlimited, or 1 to 2,000, but usually unlimited. And this will require you to have traded for a couple of months. If I get it right, it should be around 3 months. So used a certain number of lots. So that is that regarding flips or stacking. But note the technicalities I've mentioned, the volume of volatility of the pair you're trading, the sessions, and of course your positions. And note that this also is riskier than conservative. So conservative is you just opening maybe at most 1%, 2%, 3% of your equity, and then trading that over a couple of trades instead of trying to make a kill in one single trade. So that is that after choosing your method. So now that if you've chosen your method, but then I'm delving more into conservative approach here. So I asked AI, I gave the prompt for AI to create a plan or to create a projection of trading this $10 equity over certain number of trades, like 20 days, because the market opens 245. So Monday to Friday, that's about 4 weeks. So risking $1 per day. So it boils down to you having just one single quality trade in a day. And know that what we are doing here, you can also take it to a bigger account. You can scale it up, you can scale it high. So because you cannot risk 1% of $10, you can only use a micro lot 0.01, which is already 10% of $10. So so we are already risking too much even with $1, but then we are limiting our trade to $1 per day, one good trade in a day. So the risk to reward is 1 to 3, as you can see, and the win rate, we are not speculating too much on a 50% win rate or 80-60% win rate. If you have a higher win rate, even better. But then average win rate most times of even very good traders will be 40-45%. Some will have 60-80% over time. But then let's look at 40% win rate, and with a 1 to 3 win to risk to reward, you will be profitable even with a 40-45% win rate. So trading days of 20, 20 days, like every day, like a trade per day, over the 4 weeks. This is what we have in the profit and losses. So for your wins, 40% of 20 trading days will be 8 wins, and for your losses, 60% of 20 trading days will be 12 losses, right? So we are assuming here that the losses do not are not consecutive. We are assuming that the 12 losses are not consecutive, so it gives you some power to carry on the trades for the next 20 days if you have some wins in between, you understand? So if not, we add another projection for a 10 trade system, but this is focusing on a 20 trading day system where the losses are not 12 losses in a row. It could be 3 losses in a row, it could be even 4, 5, 10 losses in a 8 losses in a row, but not 12 losses in a row. Do we get? So now the profit per win will be $3 because you are doing 1 to 3 and you are risking $1 to win $3 from the market. So loss per loss is $1. That is when you lose $1. When you win or you run into profit, you are making $3. So this, see the sample demo flip I showed you earlier, you would see that on that time frame, it was actually a sniper entry. Here usually is a sniper entry. I would do another video to show some things I look out for when I take these sniper entries. I take these sniper entries on $10, but I do not stack out. I do not stack. So it's possible for you to actually be conservative, like I said here, because I had a case or scenario where I'd funded $10 and I would do like, I had consecutive profits for a number of days. So doing some $7 withdrawal, $10 withdrawal, $14 withdrawal. Usually I would not most times leave it to run to 200 pips. Because I was trading like a trade per day, so no swings on such. So and the $10 was raised to $50 in a couple of days. Probably to show another example on a real account soon. If you are watching this point, I want to ask you to kindly subscribe to this channel, as I plan to bring more things, more amazing stuff in the next couple of days, in the next couple of weeks. So total profit and losses are summed up here. For your total profits, for 8 wins at $3 profit, you are going to have $24, right? For total losses, $1 per trade, risking $1 per trade, you're gonna have $12 losses. So if you have followed your discipline plan, risking $1 per day or per trade and per day, your net profit will be $12. That is $24 profit minus the $12 loss. So you're going to have $12 at the end of the month, which is still a very, very, very I would say that is a very, very it's a good return. It's a good return. This is about 12% already on your account. Yeah, that is 12% on your account, because you actually won. You had 8 wins, you had 12 losses, and 12 minus 8 already. 12 minus 8 is 4, right? Yeah, 12 minus 8 is 4. So I will say that, and then 4, you had 4 times 3, 12, because you were doing 1 to 3. So 4 times 3, 12. So you add $12, which is on a $10 account, that is huge. It means that if you were trading a $100 account, that would be $120. If you were trading a $1,000 account, that would be $1,200. And if you were trading a $100,000 account, that would have been $120,000. And if you were trading $1 million account, that would have been 1.2 million dollars. So that is actually, of course, at a higher equity, you would not risk 1% most likely, and you would not really go for 1 to 3. You want to most likely set a B at 1 to 2 most likely, or be at 1 to 1 while you allow market to run. So you see the monthly profit here. With a $10 initial equity, your potential monthly profit will be $12, resulting in a total equity of 22. So here you have raised your account, you have raised your $10 to $22. So if you withdraw the profit of $12, you can, of course, if you want to buy a prop, some prop account will sell for $22. You can withdraw this to buy a prop firm, or you could just send this into a savings account or something, and then you go again the following month. And when you do this again, the second month, the third month, you are already building some habits and psychology that will help you not just grow some money, but at the same time, raise money for a bigger account, prop firms, raise your equity, or fill some needs at the same time. So let's see the entire plan. Note that this is a warning now. After seeing the plan, you need to know this, that what I've shared there is not a financial advice, but it's for educational purposes only, like all the FX videos here. So you need to keep in mind that trading involves risk, high level of risk, and actually the results are not typical and they may vary. So this calculation assumes a consistent win rate. It must be consistent, and the risk reward too must be consistent. That means it requires high level of discipline, and you know that discipline is actually one of the discipline of psychology, very, very difficult for most traders and needs to be worked on every time. So thank you for watching. If you found some value, kindly like and subscribe. You can share to your groups, share to your if you have forex mentees, share to them, so that they can learn to grow small accounts, and they can see that they can grow small accounts even if they don't have big capital, and they can actually use this as even a practice account rather than trading demo all the time. So thank you for watching. Remember to subscribe again, like, share, turn on the notification button, and bye for now.